We learned over the weekend that the Trump administration was looking at trying to introduce a 50-year mortgage, which on the surface sounds like an awful idea. And then I took a deeper dive into it, and it's an awful idea on so many levels. And what I'm concerned about is it might convince people, assuming it even gets to that point where they offer 50-year mortgages, it might trick people into thinking that they're saving a whole bunch of money. On the surface, it seems like you're saving money, right? I looked at some of the math. Wall Street Journal had a piece out, and it could save you, based on where things are right this moment with interest rates, which are 6.1 and change, save you about $500 a month. That's good, right? Sounds great. I'll take $500 a month saving, except then you realize, well, 50 is 20 more than 30, which means you're paying 20 extra years worth of interest rates. And it turns out that's like a lot of money extra that you're spending on a home that, frankly, if you couldn't pay off in 30 years, means you probably can't afford the level of home that you're looking for. And Charles Payne from Fox Business was on America's Newsroom earlier today, and he went through the numbers.
I do not like this idea. And again, it depends on how much the house costs and what. But if you just took a 4% interest rate, for a 30-year, it would be $2,300. For a 50-year, it would be $1,900. So you're saving almost $500 a month in terms of affordability. But by the time you finish paying this bad boy off, the 30-year, you pay $359,000 versus a 50-year, almost $700,000, right?
Oh.
So it's just a gargantuan difference just to make people feel better, you know, and that's not the way to do this, right? There's so many other ways. I feel so strongly about the momentum that we'll have going into next year. The one big beautiful bill kicks in. We'll have a more accommodative Federal Reserve. You know, I think economic activity is going to build. Companies will be encouraged to build here because they'll be able to write a lot of that off. I think we're on the precipice of an economic boom, and with lower mortgage rates, that will help the housing market a lot. So this, I would rather see President Trump do some other things with that tariff money.
He's 100% correct. This makes no sense to me. The only way this would, in theory, make sense in a lot of ways is beyond the average person's control. But maybe there are scenarios that unfold that are within someone's control. So let's say right now you definitely can't afford the homes based on down payment, the price of the region that you happen to live in, based on the 30-year fixed rate, whatever it is. But if you had a little bit of extra room, you could afford the monthly payments, and then next year you'd be able to really increase your funds and pay down the loan and cut it down within 30 years. So in other words, say you could do 31 years or 35 years just making the math work. But that's obviously not offered, although they're 40-year but that's the only way that makes sense. Unless you're someone who is doing this, I guess, for investment purposes, this could make sense. So let's say I have money to invest, but I don't have a ton of liquidity. So let me take on a 50-year mortgage, 50-year loan, because my intent within a year is to sell, or 2-3 years is to sell and make a killing. It's in an area that right now you can get a lot of good deals, but clearly the writing's on the wall. Things are going to get a whole lot better. That's the only way I envision this making any sense. If you're in that position, there might be, again, very small percentage that 50-year mortgage rates makes sense. This does not seem like that's that big of a deal. And if you think, unless I guess you're okay, to you, you're okay spending a significant portion more to purchase a home if it means, you know, lower monthly payments. If you are totally okay with that, okay, that makes, I guess, a little bit of sense. And I say that as someone who's looking at homes now, and I have a similar circumstance in which I'm waiting for the mortgage rates to go down a little bit more. But I know as that happens, the prices of the home is going to go up. I'm okay making that kind of trade-off because I would rather pay for the actual property than pay interest in the loan to pay for the property. I've just convinced myself that that's the right move, even though ultimately it's probably a wash, especially if I refinance at some point. But I don't know. Does this make sense to you?
No.
I keep looking at it saying, well, maybe it'll make sense.
Wouldn't that just create like another housing bubble too? If it's a bunch of people that can't afford homes.
100%. And that is an important piece. Now, I only say, I shouldn't say 100%, 50%, because we don't know what the terms would look like. Is it possible that this comes with certain qualifications, whatever they might be, to prevent another housing crisis? It's possible. I just don't know how you would build that up. So because what's the best way to ensure that people aren't purchasing homes they can't afford is to create qualifications suggesting that the person looking for the loan has good enough financials where you say, okay, there's a stronger likelihood that this person's going to be able to continue to pay on time than not. So the people who are the ones who are struggling the most to afford a home on a 30-year mortgage, they're not even going to qualify for this, which then means people who already can afford homes and just need a little bit of wiggle room, you're having them take homes off the market or compete more in a way that's going to raise the prices of homes, making it even more unaffordable or less affordable for people who are lower income. I just don't know how this works. You want to know the best way to fix all of this, and you don't need a 50-year mortgage rate? It's actually really easy. Lower the mortgage rates. Get the rates down. This would not be a problem, 4 years ago, 5 years ago, when rates were in the, 2.1, 2.2, something like that? How about we just get back to that point? I'm not complaining. You get me down, you give me 2% interest rate, I'm in. I am in. I'll buy 2 homes. I'll buy an even bigger home that I can't afford for two versus what is it today? Do we know 617? I think 6.2, something like that. It's insane. It's too high still. At least he's thinking about ways to bring, in theory, the cost of home ownership down, even though it raises it in the long term. How about you do a 10-year loan for no interest? Can we do that? No?